This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices surged 9% on Monday after shipping in the crucial Strait of Hormuz was disrupted by retaliatory Iranian attacks following initial bombing by Israel and the United States that killed Iranian Supreme Leader Ali Khamenei. Brent crude futures rose as much as 13% to $82.37 a barrel, the highest since January 2025. Before retreating to trade up $6.91, or 9.5%, at $79.78 a barrel by 0748 GMT. U.S. West Texas Intermediate crude climbed to an intraday high of $75.33, up over 12% and the highest since June, though it later paired gains and was up $5.88, or 8.8%, at $72.90 per barrel.
The widening Iranian conflict is disrupting oil flows to several Asian countries as vessels are bottled up within the Middle East Gulf and crude and transport costs are rising, industry sources and analysts said on Monday. The disruptions highlight the risks to Asia, the world's biggest oil-consuming region, which sources 60% of its oil from Middle Eastern producers, from the fighting between the US and Israel on one side and Iran. US President Donald Trump signaled the US-Israeli military assault could continue for weeks, which could mean a prolonged disruption of traffic through the Strait of Hormuz, a pinch point through which some 20% of global oil output.
Moving on to the top news in the energy sector.
US average retail gasoline prices are set to break above $3 a gallon on Monday for the first time in more than 3 months as the conflict between the United States and major oil producer Iran interrupts global oil flows, analysts said. That's potentially a major risk for President Donald Trump and his Republican Party leading into November's midterm elections as price inflation remains a key concern for voters. Trump has repeatedly, and often falsely claimed credit for lowering gasoline prices since returning to office last year. Average pump prices could surpass $3 per gallon on Monday for the first time this year, according to Patrick DeHaan, an analyst at retail price tracker GasBuddy.
Several marine insurers said they are canceling war risk cover for ships due to the conflict in Iran and the Gulf. Insurers including Guard, Skuld, North Standard, the London P&I Club and the American Club said their cancellations will take effect from March 5, according to notices dated March 1 on their websites. War risk cover will be excluded in Iranian waters, as well as the Gulf and adjacent waters, according to the notices. Skuld added in its notice that it was working on a buyback option to reinstate cover. Next, we have the top news in metal market. Aluminium prices rose on Monday as the U.S.-Israel attack on Iran heightened concerns over potential disruptions to shipping in the key Strait of Hormuz, a critical route for global commodities. The most active aluminium contract on the Shanghai Futures Exchange climbed 3.21% to close daytime trading at 24.465 yuan a metric ton, having touched a 4-week high of 24,495 yuan. The benchmark 3-month copper on the London Metal Exchange, meanwhile, climbed 2.79% to $3,227.50 a ton as of 0700 GMT, after touching a 1-month high at $3,232.
Iron ore prices reversed earlier losses to trade higher on Monday, as investors shifted focus to potentially higher freight rates following the Iran conflict and falling shipments from major suppliers. The most traded iron ore contract on China's Dalian Commodity Exchange closed daytime trade 0.87% higher at 754 yuan and 50 fen, $109.64, a metric ton. The benchmark April iron ore on the Singapore Exchange rose 0.85% to $99.20 a ton as of 0731 GMT.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures hit a 1-week high on Monday and closed higher for a second straight session, tracking gains in Chicago edible oils, while advances in the energy complex added further support. The benchmark palm oil contract for May delivery on the Bursa Malaysia Derivatives Exchange gained 104 ringgit, or 2.57%, to 4,146 ringgit, $1,056.57, a metric ton at the close. Bursa Malaysia's CPO futures opened higher, tracking price spreads in rival oilseeds, a Kuala Lumpur-based trader said, adding that gains in the energy complex were supporting sentiment, as supply risk concerns intensify amid escalating tensions in the Middle East, threatening one of the world's most critical energy corridors.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.